Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 427 on May the 16th, 2026. I'm your host, Eric, and in this week's show, we cover the trades from last week on Keel Infrastructure Corporation, Rackspace Technology, Sunrun Inc., and Redwire Corporation, and we discuss 4 new trades on Richtech Robotics, SELLAS Life Sciences Group, Hewlett Packard Enterprise, and Lumen Technologies. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week nearly unchanged. The Dow Jones Industrial Average lost 83 points, closing at 49,526 points on Friday. The S&P 500 index grew 9 points, ending the week at 7,408 points. And now it's time for the topic of the week. The topic of the week is feeling like a genius. There are a lot of wonderful sayings in the investment community. One of them is that bull markets create lots of geniuses. When most people only buy stock and the market is creating new highs every week, sometimes every day, it's easy to feel like you're a genius. That's not a bad thing. Just don't break your hand while patting yourself on the back. Trading at all-time highs can be difficult as well. If you buy, you're paying the most money ever for that stock. And if you sell, you might look like an idiot when a new high is created. So which one do? Buy or sell? Keep following the strategies that are working for you, but always stay vigilant. Until you close the investment, it's a live trade. So I celebrate exits, not extensions. It's also easy to get lazy and sloppy when the market is doing all the heavy lifting for you. So keep doing the math so that you can keep making money. All right, so let's go ahead and get into the review of last week's trades. We're going to start off with the covered call on Keel Infrastructure Corporation, symbol K as in Kilo, E as in Echo, E as in Echo, L as in Lima. At the time, the stock was trading for $3.95 per share. I looked at buying stock and selling the June 4 call at 60 cents, hoping for a return of 16.46%. Well, shares of Keel Infrastructure grew 44 cents, ending the week at $4.39 per share. The call option we sold grew 26 cents, leaving us with a net gain of 18 cents if we were to close the trade out immediately. Of course, if we hold onto the trade and the stock remains above $4 per share through expiration in 5 weeks, we stand to make more than 3.5 times that amount of profit. So the trade is working out as planned so far. No need to make any adjustments. Next up, we have the cash secured put on Rackspace Technology, symbol R as in Romeo, X as in X-ray, T as in Tango. At the time, the stock was trading for $5.49 per share. I looked at selling the June 5 put at 90 cents, hoping for a return of 18% in 6 weeks. Well, shares of Rackspace grew 32 cents, ending the week at $5.81 per share. The out-of-the-money put that we sold is still out of the money. Now, we could capture 1 nickel of profit by closing the trade earlier. That's right, 5 whole cents for heading for the door right now. Of course, with stock well above our break-even point, there's no reason to close this one out early either. This trade's working out as planned, so no adjustments are needed. Now, we had a credit spread on Sunrun Inc., symbol R as in Romeo, U as in uniform, N as in November. At the time, the stock was trading for $14.62 per share. We looked at selling the June 13 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Well, shares of Sunrun fell 63 cents, ending the week at $13.99 per share. That out-of-the-money put spread that we sold is currently 1 cent in the money. The stock price is still 32 cents above the break-even point, so no reason to make any adjustments just yet. Still, this is definitely the time to have a plan and to get ready to execute it if needed. So my first plan of action with these credit spreads is to sell a higher strike call spread against it to create the iron condor. Now, it's way too early to do that because you could actually lock in a loss and not allow your first trade, that put spread, to actually profit. So just consider yourself on caution with this trade since the stock has moved against us. We'll just have to see how things go over the next couple of weeks and if it ends up being time to create the iron condor, but not yet. Our final trade from last week was the debit spread on Redwire Corporation, symbol R as in Romeo, D as in Delta, W as in Whiskey. At the time, the stock was trading for $11.06 per share. I looked at buying the June 10-11 call spread for 55 cents, hoping for a maximum gain of 45 cents, or that's an 81.82% return in 6 weeks. Well, shares of Redwire jumped $2.97 per share, ending the week at $14.03. The in-the-money call spread that we bought is now even deeper in the money, which is great. The trade is working out even better than planned. So the only issue is that we have 5 weeks before we can truly lock in our maximum profit. So no adjustments are needed at this point, but definitely keep track of the stock and always have a plan on how you're going to lock in profit if needed along the way. All right. So that's it for the review of last week's trades. Yesterday, May 15th, was the expiration day for all monthly options in the month of May. All trades on today's show will use the June 18th expiration date for monthly options expiring in June. You might find better prices on Monday once the half strikes are quoted. Since yesterday was the expiration, there'll be a whole batch of strikes that are quoted for the first time on Monday, so keep that in mind. Let's get into the new trades. So we're going to start off with our covered call. I'm looking at Richtech Robotics Inc., symbol R as in Romeo, R as in Romeo. The stock ended the week at $2.68 per share. I'm looking at buying stock and selling the June 3 call at 31 cents, hoping for a return of 23.51% in 5 weeks. Now you enter this trade by buying stock for $2.68 and selling the June 3 call at 31 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price is $2.37 per share. In real terms, that stock purchase will require $268, and you'll collect $31 for selling the option. Next is our cash secured put. I'm looking at SELLAS Life Sciences Group, Inc., symbol S as in Sierra, L as in Lima, S as in Sierra. The stock ended the week at $7.08 per share. I'm looking at selling the June 7 put at $1.25. That could create a return of 17.86% in 5 weeks. Now you enter this trade by selling the June 7 put at $1.25. This trade makes the most money if stock prices finish above $7 per share. The break-even price on this trade is $5.75 per share. In real terms, you'll collect $125 for selling the put, and you'll have $700 locked up just in case you need to purchase the stock. Now we have our credit spread. I'm looking at Hewlett Packard Enterprise, symbol H as in Hotel, P as in Papa, E as in Echo. Stock ended the week at $33.10 per share. I'm looking at selling the June 32 put spread at 41 cents. That could give us a maximum possible loss of 59 cents per spread. Now you enter this trade by selling the June 33 put at $2.31 and concurrently buying the June 32 put for $1.90. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $33 per share. The break-even price on this trade is $32.59 per share. In real terms, you'll receive $41 per spread that you sell and have $59 at risk. And then our final trade for today's show is going to be a debit spread. I'm looking at Lumen Technologies, symbol L as in Lima, U as in Uniform, M as in Mike, N as in November. The stock ended the week at $10.03 per share. I'm looking at buying the June 9-10 call spread for 66 cents. That could give us a maximum gain of 34 cents, or That would be a 51.52% return in 5 weeks. Now you enter this trade by buying the June 9 call for $1.52 and concurrently selling the June 10 call at 86 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $10 per share. The break-even price on this trade is $9.66 per share. In real terms, you'll pay $66 to enter the spread, and your maximum gain is $34 per spread. So that's it for this week's show. I know I'm posting it a little late. I'm on the West Coast today. A friend of mine had an amazing party in downtown San Francisco yesterday, so I had to put a tux on, but I got a few nice pictures out of it. So happy birthday, Tony, if you're listening. And for all the other people listening, have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.